Afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you with our weekly wrap-up. Graham, what can you tell us about what went on in the market last week?
Yeah, Stacy, it was a pretty strong rally in the market last week. You know, we had all 11 S&P 500 sectors close higher. We really saw maybe the advance of the U.S. dollar kind of temporarily maybe stall out a little bit, and some possible whispers coming from the Wall Street Journal that maybe the pace of increasing might be lowered by the Fed. Now, again, that's all speculation, but I think that was enough in a very oversold market to get some pretty big bounces. So if we look at the Russell 2000 or the S&P 500, the NASDAQ, we saw those indices up 3 to 5%. And again, we saw 11 of the S&P sectors all end up, and we really saw energy and basic materials and technology really lead. All that being said, we didn't see the pace of yields on the treasuries like the 2, the 5, the 10, the 30-year. Listen, they all went above 4% last week, and we saw the 2-year above 4.5 for about the second straight week. Home builder sentiments fell a bit. You know, if we look at housing starts, really dropped about 8.1% because we really saw the mortgage rates. I mean, think about this, Stacey. We had mortgage rates upwards to around 7%, but just in January, they were around 3%. Kind of wrapping up international, you know, really a lot of drama, political drama going on over in the UK. We saw the Prime Minister resign. I mean, I think that was the shortest term for a prime minister in British history. So a lot is going on over there in terms of political upheaval, if you might. We still saw the consumer price index for the UK up around 10.1, so stubbornly high inflation. You know, Australia reported consistent unemployment rate about 3.5%. So they have I would say almost a zero unemployment rate, very similar to ours, if not right on. So that continues to hold inflation high as people feel comfortable about the job. They can spend a little bit more. And the Chinese, you know, National Bureau of Statistics, kind of a weird thing, they didn't publish their GDP data. And they said it might be indefinitely in terms of when they would report the data. Maybe they're a bit disappointed in it. Not exactly sure.
Okay. Well, with regard to that rally last week, what do you think? Is this a sustainable thing for us?
You know, we'll have to wait and see. You know, how much is the Fed going to have to raise interest rates? Are they going to have maybe a pause or a pivot or some adjustment to the pace of raising rates? I think if we get any acknowledgement to this, or we're showing in the CPI numbers some consistent plateauing and coming down in some of the more stubborn sides of the inflation picture, I think the market can stage and continue to rally. You know, traditionally, Stacey, we are moving into a very good time in the market. So you have some of that tailwind for the market as well. So I guess we'll just have to see. It wouldn't hurt to have some good pause with the Fed rate increases and maybe some really consistent rolling over of inflation that we see in the economic numbers.
Okay, well, something else we're coming up on is midterm elections. So how does the market generally fare during this time in our election cycle?
You know, it's really interesting because I'm glad you brought it up. There's usually a lot of conversation about are the markets going to do really well? Are they going to do really poorly? Think about this. Since the 1950s, during midterm elections, the markets 1 year later up about 16% on average. Any other period about 7%. If we think about, you know, what if we have, I'm going to look at my notes here. If we have a unified government, we're looking back to 1933 to 2021. We're looking at returns of about 10.4. If we're looking at a unified Congress, that's up about 7.4. In a split Congress, it's up about 10.8. So if you think about it, either way you slice it, the market's up. And I've often said over the years, almost 30 odd years I've been in the business, you know what, the markets just want to know, right? And if they know, then they know how to manage it. If they don't know, that's when the markets get a bit spooked, right?
And that's certainly timely at this time of the year. Okay. Well, thanks so much for that, Graham. And thanks to our viewers for joining us today. We look forward to seeing you again next week for a Halloween edition of the weekly wrap up. So join us then. Have a great week, a great weekend, and we'll see you Monday. Thanks so much.
Take care.